Good morning, guys. It's Nick at Optima PS. I hope you're all well. Thanks once again for coming back to my channel. I really do appreciate it. Merry Christmas, Happy New Year, Happy Holidays, whatever you may celebrate. We are in that period in between Christmas and New Year, the boring period, and I thought I'd jump on and share a video with you all, share some thoughts. I hope you all had a great time over the holidays. So what I wanted to do today was talk about one of the subjects that's getting more and more important to us as time goes by, as prices rise. And that is a perfect, or at least in my opinion, a perfect exit plan. And I wanted to share it with you and see what you thought, and let me know in the comments. Let me know if you have any different ideas. This is an open think tank, so it'd be great to hear back from you all. As ever, you know me by now. My name's Nick. I am a financial advisor, but I'm absolutely not your one. I don't know you personally. You don't know me. I don't know the first thing about you. So to share anything that could be considered financial advice would only be terrible financial advice, because I don't know enough about you to give anything but terrible financial advice. So anything I say or do today is purely me, a guy on the internet, sharing some thoughts in the hope that it does bring a bit of value to you. And I did want to bring some value. I wanted to talk about one of the most important subjects. You can see the crypto world is still moving fast, but I think this is mainly sellers rather than buyers. If we jump on to see the markets today, we're in a position where most things are red, aren't they? The world is down a little bit. In the last 7 days, Bitcoin's down 3%, but hey, we're still at $98,000. So worse things have happened. The last 3 months is a much more healthy picture. I think most of us made some profits now, so that's great. But some of you might be new to the game. Some of you might have not enough in your bags as you would like. And this one's mainly for you. This is showing you how you can either take profits today and in a healthy way, boost your portfolio still moving forwards, or if you are one of those people, like many of us, who don't think you've got enough sat there in your bag, this shows you a way you can enjoy profits whilst also still continuing to build for the future. If we look at the markets, you've got Bitcoin at 98,000, Ethereum at just shy of 3434, XRP at $2.24. We're down 4% in the last 7 days. We keep dropping it and kissing some of those low prices, but we tend to be holding out a little better than most might have imagined. I'm hoping this is a healthy correction and not something more sinister. I believe it's a healthy correction, not something more sinister. And in the grand scheme, I have no concerns whatsoever that this market is going where we're going. Fear and greed is sat at 63, which is still just past sort of moderate and into the greed. People are still more confident than fearful, but in the same respect, we have edged back. I think we were about 84 at one point recently, so it has edged back a bit. Some people are showing concerns. There'll be a lot of newbies in the market who, you know, once you've been around for a while, you sit and ride these corrections out with a big smile on your face, thinking it's a new time to buy. New people don't have that level of comfort and confidence, so there'll be a lot of people panicking and pulling the trigger and selling out at a loss. That's what markets are for. That's what happens. That's why we get to buy in lower. We get a bargain price because somebody else has sold at the wrong time, right? That's unfortunately just the way trading works. So going through where we are at the moment, then I wanted to share an exit plan with you, and I wanted to show you guys that maybe aren't where you want to be with your bags, how you can get there, taking some risk off the table, enjoying the profits from the bull run, and still building for the future. So I've designed a spreadsheet. I very arrogantly called it my perfect exit plan. That's my perfect exit plan. I couldn't dream of telling you what's the perfect one for you, but I hope it brings some ideas and some value to the table. By all means, share with me your thoughts as well. As ever, if you like what I say today, give me a like, give me a subscribe, share me on social media, drop me a message on Twitter and let me know that you don't agree with me, you do agree with me. All that's really helpful. But yeah, so I'm looking at this. I'm looking in column A here at crypto units. I've put crypto units rather than XRP. I am an XRP focused channel. I'm an XRP focused person myself. When I do my own spreadsheets, I actually even translate current value of all my 34 different coins to their value in XRP as well, because that's just the way I think. The bulk of my portfolio is XRP. That's what got me into crypto in the first place. I'm not saying it's the only good coin, but it's the one that I personally hold the most of, and I think a lot of my audience is the same. So this is based around the value of XRP, but can be translated to anything. So the number of units here I've done in values of what I think are the most common. So 10, 25, 50, 70, 80, 90, 100. I've not gone higher than 100,000. Most people listening won't have more than 100,000. I'm delighted for you if you do. But using the 100,000 number, it's linear using that 10 number anyway, isn't it? We can go in units of 10. So if you've got 1,000,000, times it by 10. If you've got 150,000, you do 1.5. It's to give you an idea and to show you the strategy as opposed to making it cover absolutely everyone out there individually. So I've gone with a market top price here in column B of $20. That's my personal target for this market. Do I think we'll hit it? Probably. Can I guarantee it? Absolutely not. I've used the thoughts of all the good technical analysis guys that I follow, and this is about the average. Some people think $5, some people think 50, some people think 1,000, which I think is a bit too much for this time. But that's about the average across the board. So I'm using $20 here. It's a nice round number again. It's easy to divide or multiply with the maths. But that could be anything there. This table, this chart works the same because what I'm actually using is a ratio of 67% and 33%. So you can see there in column F, I've called that treat ourselves. I'll explain that in a moment. So what I've actually looked at is a sales amount of 67% when we hit what we think is the market high. That doesn't mean you're going to cash it in and spend every last penny, but we are going to treat ourselves. So essentially what I've done here is I'll use column 3, so row 3, so that you can see this. It's 10,000 units, so it keeps it nice and simple. First market target price is $20, which would give you a $200,000 valuation. And I want you to sell, or I'm going to sell 67% of that bag. I'm going to keep 33% of that bag in there in case I'm wrong and this isn't a market top of a bull run and the market never stops going up. I want to hold some in there for the future just in case I'm wrong. 33% is probably a high number because I think the likelihood that we're going to hit a top on the crypto market in general and dip again is way into the 90% plus points. But 33% is a nice round number. If we're wrong and you take 67% out and you keep that 67% in the bank, you've done very well with your $134,000 from your 10,000 units, and you've still got, this would become a moon bag, right? You leave it there to the future when the price hits the $100 plus, and then you're still going to be very wealthy. You didn't get it completely wrong. So what I'm looking at though is the 33% of the sale bag leaves you with, 67% leaves you with 33%, so 3,300 units there. Of that $134,000, I'm going to take 33% of that, and I'm going to treat myself. My number isn't 10,000. I'm a bit more than 10,000. I'm not necessarily higher than 100,000, but my number's a bit more than that. But it doesn't matter. This is all purely for an illustration purpose. Take 33% of the 67%, and whatever you call a treat. For some people, treating yourself might just be buying more crypto. That's, for me, it may well be. I don't necessarily need any of this money, but I think we all need to reward ourselves at the end of a bull run and place that back into fiat in my bank. And if I don't spend it after 6 months, maybe I'll buy back in when the markets dip. If I have spent it, I'm going to pat myself on the back and thoroughly enjoy the reward. But let's go back to this then. So what the real purpose of this is not about treating ourselves. That's just to keep ourselves in the game, keep ourselves interested, make sure that we're happy. For anyone out there, if you give yourself $44,000 for selling a portion of your 10,000 XRP, which I know from 90% of you did not cost anywhere near $44,000, we've already taken a huge profit out. We're over the moon, and the rest now is gambling with the house money, right? So that leaves us in the position to put $89,780 worth of that original 67% sale, $134,000. We're going to leave that in stable coins as our rebuy bag, which basically means it's sat there on the sidelines, letting the markets dip as far as we think they're going to dip and buy back in. My magic buyback in number here in column H is 40% of the market top. Typically, a crypto market will fall slightly more than 40%. If we look back at all the dips, the bear market troughs over the past bear and bull runs, we've seen a bigger correction than 60%. So down to 40% of the value, but sometimes we don't. So what I'm looking at is to get back in, maybe with dollar cost average that in. This is just to keep the table really simple. I will dollar cost average back in, to be fair, but this is to keep the table really simple and to show you what we mean. But I'm using 40% of the top. So what that means is we'd hit a target value of $20 per XRP. Here we're going to have $200,000. We're going to sell 134,000 of it, leaving 3,300 coins, XRP, still there invested. I'm then going to treat myself. You may want to treat yourself, you may not, but I'm going to treat myself, which leaves 89,780 US dollars in stable coins, ready to buy back in when the price dips by 60%, down to 40% at the top, which would give me an $8 buyback in price. That would buy me 11,222 units, which, this is the really important part, guys, is more units than the 10,000 I began with here in column A. So I've taken money out, and I've still enabled myself to buy more units with those stable coins. And remember, here in column E, I've still got 3,300 units left that have remained invested all the way through, which gives me 14,522 units when we've bought back in at the bottom. My next target price, moving into column K, is going to be $50. Again, these numbers, you can make your own numbers up here. What's important is the 33-67 ratio. So the next time we hit a bull run, having bought back in with our extra 11,000 units, our existing 3,300 units making 14,000 units, I'm going to wait till we hit $50. When we hit $50 there, I'm going to do exactly the same again. $50 times 14,000 units gives me 486,000 US dollars worth of units. I'm going to leave 33% in again, which is 3,703 units. Again, I'm going to put myself in a position where that enables me to rebuy. I'm not taking a treat this time round. I'm going to assume the treat first time round was enough to keep us all in the game. Second time round, you're going to realise that taking a treat, although joyful, is damaging to your overall net worth, or restrictive on your overall net worth is probably a better way of phrasing it. So I'm not going to rebuy back. I probably won't do the treat myself this time either. I treat myself enough with other things. But this is to give people an exit plan that allows for treating ourselves. I'm not going to treat myself this time. I'm going to throw all that into my stablecoin bag, which gives me, in this scenario, 325,967 US dollars worth of stablecoins. When that $50 price hits 40% of its high price, I'm going to buy back in again, which gives me the ability to rebuy in with a lot of units here. Yeah, so 16,297 units. Remember, I began with 10,000 units, and that creates my moon bag. Add that to the 3,703 units I left in all the way through again, because I only took 67% out. My total new units here are going to be 20,001. Now, this number is important because the way this formula, the 6733 formula, works is you'll see here, if I'm looking at columns 1 through to 3, rows 1 through to 9 in column A, I began with 10, 25, 50, 70, 80, 90,000, 100,000 units. I scroll through to my final moon bag, and it's roughly double. It's slightly more than double. 20,000, 50,000, 100, 140, 160, 180, 200,000. I've basically doubled up my holdings while still treating myself with a considerable sum of money. $44,000, $110,000, $221,000, $300,000, you know, depending on the size of your bag, the treat gets bigger and bigger. You may choose to invest more than that back in rather than spend it all. I certainly won't be spending hundreds of thousands of dollars on myself. I might spend 20,000, I might get a new car. It won't be a Lamborghini. I'm not a Lamborghini guy. I might get my wife a new soccer mum car or something like that for taking the kids to school more than anything else. But going back here, you've essentially doubled up the value of your holdings while still taking a little bit of a treat and while still taking all your money off the table, or most of your money, 67% of your money off the table, when the market is hitting a downturn. So again, here, the sale valuation, you've got $480,000 from an initial holding of pennies, like a couple $1,000 to get you 10,000. You've got 1.2 million, 2.4, 3.4. This money for most people is retirement money anyway. That's generational wealth. You may not think it's generational wealth. You know, even if you had $100,000, $4.8 million, is that generational wealth? Well, if you take it out, put it in a standard bank account with 0.2% a year interest and spend 100 grand a year, no, you're going to run out one day. If you invest it properly and you're making yourself a 6 or 7% return, you would struggle to spend that money. 6% of, what's that? Let's say $4 million is $240,000 a year spending money. If you're in the States and President Trump honors his statement and he makes the income resulting from holding an American-based cryptocurrency such as XRP is tax-free, $240,000 a year tax-free is one hell of an income to be spending. So you may not need to roll on to this final push, but I'm going to because I'm greedy. And so where you find yourself is from $10,000, 20,000 XRP units. My Moonbag target here is $100. I don't know when that will come. It may not come 2 more bull runs from now. That would be an ambitious guess. It might be 10 more bull runs from now, but I won't care because that's my Moonbag and that's what it's for. But you're ending up in a position where you've got $2 million from 10,000 XRP. You've got $5 million from, did I say 25,000 next? Yeah, 25,000 XRP. 100,000 XRP would give you 20 million US dollars. I'm working at a 5% interest for my Moonbag. That interest can come from various forms. You may take it out and buy property. You may take it out and put it into a high interest bank account. You may buy government bonds. You may use something like an automated market maker. I don't care where you make the interest. This is using a very conservative 5%. When you've got $20 million, you'll make more than 5%. No two ways about it. When you've got $1 million, you'll make more than 5%. If you are sensible, you use the right people, you use the right plans, you'll always make more than 5%. This is a minimum. AMM should make you more than 5%, and a couple of bull runs from now, they'll be established. You'll be able to go into Goldman Sachs, JP Morgan, and say, I have this many XRP. What interest will you give me? What guarantees will you give me? And you'll get 100% guarantee on your coins, and you'll get more than 5% interest. This is a bare minimum. But the point being, you could turn 10,000 XRP over the space of the next 10 years, most likely, and you'll be seeing a return of $100,000 a year without spending your initial capital. You'll always have your $2 million or your 20,000 units, and you'll get $100,000 a year. For most people listening who've only got 10,000 XRP, or the equivalent of a different currency, a different coin, to turn that into 100,000 a year is a sensational return. You couldn't dream of doing that in the standard markets. Not without continuing to dollar cost averaging for the next 20 years. It's a sensational position to be in. That 67-33% ratio means you can treat yourself, you can take risk off the table when markets are going to crash. And we know markets are going to crash. Don't listen to the moon boys out there telling you that this time it will never. You know, the S&P 500 is the most established market in the world, and it crashes on a 4-year liquidity cycle basis. It just does. The crashes in crypto may become more aligned to the S&P 500 as time goes by. When we have the full utility in, these coins will see much more stable peaks and troughs. You might not see your $20 to $100, $100 to $1,000 anymore. You might see $20 to $50, $50 to $70, $70 to $100, $100 to $120. The cycles will get tighter as more money comes in, but I think we're going to hit the $100 point before we need to worry about that. So this is where I'm at. The 67-37% ratio means you can take most risk off the table without running the risk that you get it wrong and the moon boys are right and we never see another bear market again, or at least you still got 33% in and you just sit and wait till that hits your target because it's going up every year, right? If those guys are wrong and the more sensible people out there are right, well, you leave some on the table because why not? But you take some off the table, you give yourself a treat, you have the ability to buy back in and still double the amount of coins you hold without ever investing another penny. Now, again, if you're like me, I'm going to keep dollar cost averaging in all the way across this anyway. Not at the moment. I think we're now at high prices. I think we're going to hit a peak. When I see that we've hit the peak and we come down, I'll wait for it to fall about 20%, then I'll begin dollar cost averaging in with my personal money, not with my bags from here. My bags from here, I'll wait for those margins, that 40% point, I'll throw it all back in. If I'm wrong and we never hit 40%, well, I'm going to dollar cost average my own money in, and hey, I've already taken profits off the table. I've already won. You know, I'm now in a position where I really can't lose, to be perfectly honest with you. Yes, crypto could crash and disappear. No one can ever guarantee it won't. But quite frankly, my average buy-in on across my market, but I'm using XRP as the number as the coin to explain my numbers. My average buy-in is about 42 cents now. It's risen a little bit. No, it's maybe 48 cents, counting everything else. It's 42 cents in XRP directly. But what it means is that we need to fall now by 80% for me to be concerned about losing my original, dipping into my original invested money. It's not going to happen. I'm comfortable now that I'm playing with house money forever. So I hope most of you guys are in that same position. You should be by now. You know, unless you made some big purchases at all-time highs in the past and you're not quite breaking even, most people now should be, if you've averaged in, should be playing with house money. But where we stand with this, it just gives you a great way of making sure you're always playing with house money. You've never got too much risk on the table, and the times you do throw in and roll the dice are when markets are already 60% down from a peak, which in my opinion means you'll never ever be in the red on your crypto again. I hope that helps. I hope that all makes sense, guys. To give you some ideas as to why I've got these lofty targets like $20, like then, or $50, like then, $100. Really, really simple. We now have an incoming US president who's the most pro-crypto president we've ever had. We have an incoming US Senate that's the most pro-crypto Senate we've ever had. We've got the already launch of major crypto ETFs. We've got Bitcoin, we've got Ethereum, we've got those mixed ETFs just launching now. We've got the approaching XRP, Solana, 2 or 3 more other ETFs are going to be approved. They won't be approved until this current SEC has stepped down or been thrown out. They won't, but in the same respect, we're talking about less than a month now. We've got automated market makers, or the equivalent ability to stake and make money returns on your crypto. We've got big banks, they're already involved. People saying big banks are coming. Big banks are here. They're not officially here. They're not holding assets on behalf of clients. They still have to hold crypto on balance sheet right now. We've got that SAB 121. That's all going. That's all going to change. We've got central banks. Central banks are here already. They're already experimenting all across Europe, all across the world. Banks are experimenting with this. They're just not finally signed off and ready to roll yet, but they're coming. We've got real world asset tokenization happening right now. Look at our charts. We've seen US government bonds, treasury bonds tokenized. We've seen gold tokenized. We are watching the foundations being laid for global real world asset tokenization, which will bring quadrillions of dollars to the market. Derivatives themselves will bring quadrillions of dollars to this market. Everything's going to be tokenized, guys. This is the digital financial revolution we've all been waiting for. We're in the early days. It might take 10 years until it's fully mature, running, global. We're seeing it, the foundations being laid now. We're so early to this party, but in the same respect, it's moving faster than I ever dreamt possible. We're seeing this move faster than the adoption of the internet. This thing is going to take over the world. We're in it. We're in it. It's going quicker than I ever thought it would, but I still think we've got 2 more cycles, which is a massive, massive opportunity for us to use a system like this, 6737, and get it right. It's going to turn me from a mediocrely, conservatively wealthy individual to a very wealthy individual. I'm not talking hundreds of millions. I don't need hundreds of millions, but you know, a couple of $1 million, $10 million, $20 million. It depends how the markets evolve, how quickly they go. Using this formula in the peaks and troughs will get me there. There will be a day when I opt out first. I might still keep my money in crypto. I always keep a moon bag, and I might choose to hold my wealth in crypto as opposed to holding it in fiat or something equivalent. But in the same respect, I will be no longer reliant upon buying the troughs and selling in the peaks to build my wealth. I'll already be individually wealthy, and I'll just choose to hold it in whatever way seems best fit at the time. I'll tell you that at the time, because right now the tools and the systems I intend to use haven't even been invented yet. Or if they have been invented, like the AMMs, they're very immature, they're very juvenile in their foundations, their beginnings, so I'm not comfortable using them quite yet. But guys, I hope that all makes sense. I just wanted to share this because I feel like having a mathematical formula approach to this, no matter how big your bag is, something that provably will double your crypto bag without keeping an awful lot of risk on the table throughout the bear markets, is a useful tip, a useful tool. So I wanted to share it. I've already been yapping on for 26 minutes, guys. If you like what I said today, as ever, please do punch that like button, drop me a comment, subscribe to the channel, share me on social media. All that's massively, massively appreciated. In the meantime, enjoy the holidays. Hopefully you've all got a bit of time off work to recharge the batteries. Have a great couple of weeks ahead, and we'll speak soon. All the best, Nick.